Hello and welcome to this, the Crypto Club and Digital Assets weekly catch-up on Zoom. It is Sunday the 10th of December 2023, and as is always the case, as many of you who watch this channel regularly will know, we never know quite what we're going to be talking about. Typically, we have conversations about blockchain, DeFi, NFTs, ICOs, regulations, CBDCs, anything else going on in the crypto world, but it really depends upon who comes along. We sometimes have guests who like to talk about their projects. We give them a 3-minute slot, and the idea is that they can give a talk through on what the project is about without the aid of slides or videos or visuals, and then we have like a Q&A session afterwards. So if you'd like to come along on a future session to talk about one of your projects, just join. The details are in the link below of how to come along. These sessions are open to novices and experts alike. Everyone's welcome. So if you're a beginner and you're just getting into the space and you have questions to ask, do come along. So with that, let's see who's going to come and join us today. Hey, Gabriella.
Hi, Gary.
How are you today?
I'm great, thank you. And how are you?
I'm good. Are you still learning about crypto and DeFi and everything then?
Yes, I'm still learning. I'm currently with the mock course. Do you remember?
Yeah, the University of Nicosia. Yeah,
Exactly, yes. So
excellent.
yes, I'm continuing with that course. So
Great. How many weeks into it are you now then?
and I arrived on October, so I'm living here,
Okay.
and I don't know for how long more I'll be here. So
Okay. Oh, excellent. Okay. But you're doing the University of Nicosia course in, what was it? Is the Introduction to Digital Currencies one?
yes.
Excellent. That's good. Hey, and we're joined by Hugo as well. Hi, Hugo.
Hi, how are you?
Good. Welcome back.
Thank you.
How are things? You looking at what's going on in the markets at the moment, or anything in particular?
Actually, a little bit, I mean, in general, but actually I was more intrigued by the message you sent a little bit earlier about how do the movements in the market actually affect adoption, DeFi, NFTs, and things like that.
Yeah.
So essentially what I'm saying is, no, I didn't buy any Bitcoin before the rally. But I'm still interested in that question, how is that affecting in general, like other things that are related to crypto, but that get confused with crypto, or they all get put together in the basket, although they not necessarily are the same.
Yeah, so I think that this ties in with, I think the note I sent out earlier was about how you've got like crypto prices are going up at the moment. Everyone's talking about it being like a bull run, because you can see Bitcoin prices going up quite nicely. And so people are saying things like real world assets, so RWAs as they tend to be called now, everyone's thinking that they're going to go up as well, because like the likes of Bitcoin's going up. But real world asset tokens are linked to the underlying asset. So it's a bit like having a token that's giving you exposure to gold. Well, that means that the price of the token is going to connect to the value or the prices of gold, not to the price of Bitcoin. So that there's no direct connection.
I agree. No, the way I look at it is exactly like you said. To me, a little bit of real world assets is a little bit of a hedge on Bitcoin.
Yep.
If Bitcoin goes up, great. You don't make as much, but also if Bitcoin goes down and you have some real world assets, then they shouldn't go down. So yeah.
That's right. And it's kind of interesting if you look at how a lot of traditional investors work. There's a thing called the Sharpe ratio. And the Sharpe ratio is basically if I remember correctly, it's the volatility of one asset class against another asset class. And because there is a low level of correlation between crypto and traditional markets, then that means that it's a good hedge, as you say, because gold might be going down, property might be going down, and crypto might be going up. You just don't know, that there's no correlation. And it's because of that, it means that some investors believe that what you should do is, rather than just investing in one asset class, use diversify and everything. And so the thing with crypto is that people have been getting into crypto, and typically when Bitcoin goes up, then everything else follows it, kind of thing. But that's not always the case. And so by having exposure to crypto tokens that are connected to real world assets, that gives you a kind of a hedge in a way. So that's quite good. So yeah, it's good to have a bit of variable different things in it, definitely.
Yeah, the one thing that actually makes all the sense in the world. The one thing I would add is, I think the world, the way this works at the moment is that Bitcoin gets more money into the market, or draws more users, or even more VC money and stuff. So I think it's a little bit what they mean, as in maybe the underlying asset, a property or gold, has not changed, but there's more people interested in it, or let's call it less scared, after the whole FTX and Binance stuff. And maybe that's getting people to either come back to the market or enter the crypto market. So it's an indirect effect, but I think it's there. That's kind of my opinion, but of course it's an opinion, right? I don't know.
I think it's absolutely valid that you always find that people get more excited and interested when the prices are going up, because then it appears in the press, you hear news about it and everything. So yeah, I think there's definitely something in that. I agree. Hey, joined by JT as well. Hey, JT.
Hi, guys.
What's new in your world, Fernando? Anything exciting?
Just back in London for the next few months.
Okay. In London for Christmas, then. That's good.
Yeah. Just not much happening this month, as you know, until probably end of January. So.
Okay. Yeah. And then the market gets excited because we got the Bitcoin halving in April as well, and people start talking about how that affects prices and everything. Which
it's a bit nuts at the moment, isn't it?
Yeah.
I mean, actually, I think you remember a while back we had a chat here about this, wasn't it? We touched base. It was going to go up very quickly, and it looks like it did.
Yeah. Well, it's kind of interesting if we look at the markets at the moment. In fact, if I just pull a screen up, so we can see, Bitcoin today is getting quite volatile in activity. And if we take a look, we were talking last week about Bitcoin halving and how it is that whenever there's a halving, usually Bitcoin rockets up for a while afterwards and then settles and then rockets up again. But I'm not convinced that that's going to happen this time, because I think we're now in a different marketplace from previously. Because I think there are different investors, different speculators, that kind of thing. We'll see. No one knows. But this is not financial advice, but my recommendation is do the opposite of whatever I do. You won't be far wrong. Hey, we've just been joined by Bundeep as well. Hey, Bundeep. Is Bundeep going to come off mute?
Hey, how are you?
Hey, good. What about you?
I'm in London.
Oh, cool. Okay.
Yeah.
We never know where people are these days. They can be anywhere in the world. That's the fantastic thing about this. Yeah. So
I don't know half the time myself where I am until you wake up and go, where city am I waking up in?
Yeah, you just look out the window, and if it's raining, it's probably England. Yeah.
Yes.
So,
Yeah.
is this your first time in this group, Bundy?
No, I was here. Well, I was here some months ago, but it's been a while. I think Bitcoin was probably at 16 then, and now it's at 46 or something, wherever it is now. So there we go. 44.
I think it's about 44. When I was looking just before we came on, or just under 44. Well, it's going all over the place at the moment, so it's kind of interesting. Yeah, 43.8 at the moment, but it did peak at 44 earlier on. So what's your interest? Is it on the crypto side or on the blockchain side?
It's always on the crypto and blockchain side. Tokenization of real world assets is a big one for me right now.
Yeah.
So yeah, it's a combination. It's really, that's my. So the things I'm focusing on are tokenization of real world assets. I have some very good, high quality, high yield assets I'm trying to tokenize. So I have another business, which is a finance business. We finance insurance. And the insurance premiums that we finance are amongst the best loan assets in the world. Like we have in this past, year to date, this year, we've done about $250 million worth of loans, and our loss rates are like 20 bips. And the yields are close to 10%. So, if people want to buy T-bills at 5.5%, I can give them almost double that. So I'm trying to find the right partners to tokenize that with. That's a high priority item for me right now. So any ideas are welcome.
Yeah.
And that's only going to grow. We can probably do $1 billion worth of assets in the next 3 years easily.
So run that, but Bundy, sorry, run that by me again because my headphones are dropping out at the moment. You're saying you're saying certainly around about the tokenization of assets, and then you mentioned the word insurance, which always pricks my ears up because that's a market I get quite involved in at times. But you're saying you're insuring the assets, was it, or did I hear that right?
No. So the business I have is called premium finance. Yeah. So it's effectively when a company or a person decides to pay for insurance by monthly installments, we're the company in between that basically prepays the underwriter and collects the same amount over monthly installments with an interest charge.
Okay.
Right. So say a building that's there and they have multi-tenants in their offices, so they're collecting rental every month. They'd rather pay for the insurance every month, not $1 million up front. So we'll pay the $1 million to Aviva, and they'll pay us, keep the math simple, 100,000 per month over 10 months. Obviously, with an interest charge, it might be like 110 over 10 months. So, but they get to spread out the cost of payments. It's much easier for them to pay like 110 per month than paying $1 million in one shot.
Okay.
Yeah. So the beauty is that my counterparty risk is the underwriter, because I'm effectively advancing funds to the underwriter on behalf of the person or company buying insurance. So if they default on paying, we'll give them a couple of warning shots, and after that, we simply terminate the insurance. And we get a pro rata refund on the insurance premium that's been prepaid, because insurance is always prepaid for a year. Yep. But if you bought a car and bought insurance and you sell your car, well, you get a pro rata refund on the unutilized portion, right? So we rely on the same clause. So if someone doesn't pay us, we trigger off a cancellation and mimic a voluntary cancellation as if they'd cancel it. And we get entitled to the refund. So I'm almost always principal protected. And my counterparty risk is not somebody buying motorcycle insurance who may have less than good credit. My counterparty risk is Aviva is issuing the insurance coverage.
Okay.
Because my refund comes from the insurer, not from the guy who's buying motorcycle insurance. So that's one of the most highly sought after assets when it comes to financing. So in the past, I've had the Thompson family from Canada, the wealthiest family in Canada, Thomson Reuters namesake, finance me. I've had a bank in Japan finance me. I've had a bank in Germany finance me. And right now, we're funded by Morgan Stanley. They have a $3 billion financing facility with us because they see our growth. But we have some loans that, because it's Morgan Stanley, they have this like big SPV. They have some loans that don't fit into the SPV's concentration parameters. So if we have too many premiums that we're financing written by Aviva and they're more than, let's say, 15% of our pool, we can't finance the excess. Similarly, if there's too much exposure to a broker or a certain type of insurance, so we can't have above a certain percentage of motorcycle insurance or two-wheeler insurance or building insurance. So every month we'll have excess. And I'm sitting currently on $15 million worth of excess. That's growing to about 100 over next year. And those are all great loan assets with the loss rates. The worst loss rate we've ever had in like 6 years of operating or 7 years of operating has been 30 bips. And the best rate I've had is 11. This year it's 20. So it's like near perfect when it comes to loan asset quality. And I'd love to tokenize that because I see a lot of coins and treasuries and exchanges buying into real world assets seeking yield because they're sitting on non-yield generative asset tokens. But if you buy that or you lend that rather here, I'll probably give you, like, depending on the FX rate to GBP, 8 to 10% yield. And that's super safe. Obviously, you can tell the fact that Morgan Stanley's financing us means that they have done all their homework. And we're growing. So I'd love to find a way to bridge this TradFi world I live with the DeFi world, and which is obviously why you're here. And love to find partners who can really tokenize it, but more importantly, find the yield-seeking capital in the non-traditional finance world.
Okay, so I guess the obvious one: have you spoken to TPX Exchange? TPX?
I've not spoken to them. We've had some conversations with Goldfinch, Maple, Centrifuge, those kind of people. Okay. But it's which was fine, and TPX Exchange maybe similar, maybe I don't know. I'll check them out after this call. But it's really about finding a continuous supply of capital, right? Because we don't want just a one-off. Okay, here's placed. I got to have a source of financing for the next few years.
Mm-hmm.
And so it's really, I mean, a treasury department of a big chain or a protocol or an exchange looking for deployment would be great, because we can say, okay, let's do a 3-year, 4-year, 5-year program. We'll give you a continuous supply of high yield bearing assets that are uncorrelated to the market, non-volatile assets.
Mm-hmm.
And in return, we'll give you a yield that's, above market starting here, and we'll sort of work out the nuances of things further, as long as we get a commitment of future financing, so there's no issue in us funding future flows.
So it means effectively you can offer a form of yield farming that they lock the token up, so they lock the value up, but it's not reliant on how yield farming works in other cryptos, where it's all to do with the mining and all that kind of thing. Because you can effectively securitize the future revenue stream and then tokenize that, I guess, is kind of an approach. Okay.
Yeah, totally. Right, spot on. And we don't have to, there's no dependency on yield farming with new apps that are being built or dApps that are being built, and no conversion into the base token and timing for that. It's highly predictable.
So that's quite... It's quite nice that's a different way of approaching tokenization of real world assets, because just before you came on, Hugo and I were chatting about real world asset tokenization, that kind of thing, and how it behaves in the market compared to cryptocurrencies and that. But what you're now providing is another way of hedging by tokenizing insurance, almost, or insurance revenue streams, should we say?
Insurance receivables, yeah, exactly.
Yeah. Which, given the amount of stuff I do in the London insurance market, I'm trying to remember what Lloyd's turned over as a group last year. Probably like $50 billion or something. So if you can work out ways of securitizing and introducing revenue streams on that you can tokenize, that's definitely very interesting. And it provides access to different capital as well. So quite nice. Oh, yeah. We should maybe have a separate conversation at some point. That's definitely an interesting one.
Yeah, I'll flip you a message after this call, and it's at the time I'll send you a deck that I prepared that elaborates on this. So
okay,
very happy to have the conversation. Yeah.
Cool. And for anyone else who wants to reach out, if you're not done so already, just Google Gary Nuttall crypto. I think I fill the whole of the first page on that. Or you do Gary Nuttall emerging technology, and you'll find me on LinkedIn, Twitter, or X, or whatever we want to call it these days. But yeah, it'd be good to connect and have a chat separately about that.
Yeah. Well, you're on the Digital Commonwealth chat group, right? So I'll find your website there.
Yeah, you'll certainly find me hovering around in that group amongst many others as well. So that'll be good. Excellent. Okay, cool. I don't know if anyone's got any general questions at the moment, or anyone wants to share anything, or has everyone just come along to listen today? What brings you along today, Hugo?
A little bit of catching up, and I was about to ask a question. I didn't want to keep on going about this, but actually, it's related to what Bondi was mentioning, and what we were talking at the beginning, which is, I'm really curious about how. I will not say crypto. I will say blockchain applications, blockchain protocols, and so on. So what I'm trying to say is, how is adoption going of this type of application, which solves an actual problem? As in, I think that was really interesting what we were just discussing. But how many users are actually doing that? I mean, I'm betting that there will be loads and loads and loads, because they, I'm going to say blockchain instead of saying crypto to kind of separate them. They do offer better solutions, but I'm not sure what the adoption numbers are or how that's behaving. I just saw a chart a couple of weeks ago saying how the number of DeFi users had peaked around last year, and then it was coming down. Although that, when I looked it up a little bit, that chart I think was related to trading on decentralized exchanges. But anyway, my question is to anybody who knows, how is adoption going on non-crypto trading blockchain application? Does anybody have an answer for that? I'm really interested in that one.
I'll certainly throw something in to begin with, because it's fascinating that originally when I came into this space about 8-9 years ago, it was because I was interested in blockchain and distributed ledger technology, not because I was interested in crypto. Crypto was almost like a side effect, because I've always been fascinated by this idea of blockchain enabling businesses and in fact blockchain enabling markets. So a lot of the stuff I did in 2016, 2017 was around blockchain adoption in the insurance sector. So actually, it's interesting, Bundeep mentions things like finance payments and that. We're actually looking at putting that on a blockchain. So I would say that, first of all, there are blockchain projects out there that are successful, but you don't know that they're blockchain, and you don't need to. At the end of the day, blockchain is just a technology. It's almost irrelevant. So there are some projects that are live. There are also some quite high-profile ones which have closed down. So a few examples would be InsureWave. I think originally they were doing insurance of ships and that kind of thing, and tracking them on blockchain. I think InsureWave has wound down in some ways in terms of what they're doing, or they've diversified what they're doing. You've got the likes of TradeLens. TradeLens was an initiative with, if I remember correctly, IBM, Hyperledger, Maersk Shipping, and various others, and it was to do with trade finance. So it was tracking containers on ships and the trade finance that goes with it. And I think TradeLens has not been as successful as it was hoped. So that was not good. There was a flight delay insurance project, which I'm trying to remember the insurance company that did it now. It might have been Aviva, but they did it was AXA. And it was a project called Fizzy. And Fizzy was a smart contract-based parametric insurance platform. So you could insure your flight against delays. They ran that for about 18 months and they wound that down, saying that there just wasn't enough commercial interest, but it was interesting. So it seems that at the moment, a lot of companies are still investigating this stuff, but there aren't that many examples of it going live. So in Australia, I think ASX, which is the Australian Stock Exchange, they announced that they were pulling back from doing a blockchain-based solution that they've been working on for ages and ages. But then meanwhile, you're also seeing the likes of R3 with the Corda platform, which is a distributed ledger as opposed to a blockchain, but they're kind of pretty similar in effect. They're doing lots of stuff around things like trade finance and that. And you've got Hyperledger, which is the open source Linux Foundation blockchain platform, which seems to be doing lots of stuff as well. So I think it's a real mixed bag. It's not yet at the level where it's been adopted, but I think it's it's getting there. And it was bizarre as well. I was in the shop today, just browsing around, looking at some clothes or whatever. And this other customer walked over to me. He said, "Hey, you're Gary, aren't you? I watch your crypto program." It's like, what? And it was like completely random. And I said, "Oh yeah, I watch some of the stuff you put out about crypto and that. I work for a company who are doing blockchain stuff in supply chain." It's like, wow, amazing. So there is stuff happening. And you look at some of the projects which have disappeared away, and there are still other ones that are going on. So I don't know if anyone's got any other views, but I think that there's the potential, but it's not there yet. I think people are beginning to realize that blockchain is not something you introduce in a company. It's a thing you introduce in a marketplace. So for like supply chain, it's in theory great because you can track and trace products in there, but you need all the participants in it as well. So like Walmart, we're doing a blockchain-based project called Food Trade, I think it was, or something like that, which was about the green products, so salads and this kind of stuff, and mangoes and this. And so the idea was that you could track and trace what they call from farm to fork, the provenance of the vegetables and that kind of thing. But that seems to have gone a little bit quiet as well. So I don't know if anyone's got any other examples of stuff that's actually out there that's live. But my experience so far is that there's a lot of projects that haven't quite gone as well as they can. But I think there's another wave coming through at the moment. So JT, who's on at the moment, he's working on a project which is using blockchain capabilities in a really interesting way around, I guess I call it messaging, JT, is that right? Smart contract-based messaging for authentication? Is this where JT's disappeared?
Yeah, it's a bit more than that. It's basically for communications. So video conferencing, messaging, yeah, pretty much anything video, audio, and text. And yes, just not just authentication, but management, encryption, everything, including the nodes, onboarding, rewards, all of that stuff, all done in blockchain.
So you're one of the people who probably goes to more conferences than I do. But in fact, you are definitely, JT. So what's your thinking at the moment? Is there still a lot of hype around blockchain-based solutions, or are companies beginning to adopt it at all?
Yeah, that's an interesting topic. Yeah, I think the adoption isn't there, and I think it is the fault pretty much of everyone that is in this space, almost everyone. Yeah, because people keep repeating the same things. Yeah, they keep doing another NFT project, another DeFi project, another L1, another L2, another ZK Sync, another ZK solution. It's just copy of just the same thing with a little bit more enhancements here and there. And then the VCs, of course, they like to invest because they want to make sure they get quite early in, and how it works. It's all about the secondary market and who makes money, who exits first. And what we don't see is really adoption, because majority of the people that are creating all of these L1s, L2s are not creating ecosystems. Yeah. So you mentioned R3 in Corda, for example. They created an ecosystem all around. Okay, it's not really a blockchain. I consider more of DLT, a private DLT. The same with IBM did a while back, but all of that, has to be created. And if you think about what the real life world applications that people use on a daily basis are at the moment on Web3, you count them by, one hand or two hands. Everything else is just DeFi, metaverse, gaming, the same thing we've been doing like for the past 4 or 5 years. Yeah. So that's why, in my opinion, the adoption is quite slow. Yeah. And, Gary, you and I have discussed and hear several times that the user doesn't really care. There is blockchain behind, or there is a wallet. They just want to use a product. 2 or 3 clicks, they are using a product. That's it, So I think it's a combination of founders and investors that are really not ensuring massive adoption as kicked in, If you think, well, tell me which layer 1 is actually working properly. Yeah. Just tell me one. I just want to know one. Yeah.
Bitcoin. That's probably the only one.
Sorry. Yes. I mean, that it was built for a specific purpose. Still doing that purpose. Actually, no, to be truly honest, because if you think, well, if you read the white paper, if you read white paper, you understand that, what the promise was, and the promise is not there anymore, It's not a peer-to-peer payment system anymore. It's pretty much an asset, Bitcoin, it's evolved to be an asset. So the actual blockchain is doing what it's supposed to do, yeah, but the actual purpose of it has changed, yeah.
So I think this is something that, having worked in the technology sector for many years, I've come to realize that all because something is designed for one purpose and then gets adopted by a community to do something completely different doesn't actually matter. So the example I use is SMS messaging. SMS messaging, is still used like billions of times a day, but was not originally designed to be a community messaging capability. It was meant to be for engineers to send status reports, and somehow it just got adopted, and it got absolute massive take up. So I think actually all because something's designed for one purpose, and then people start going, oh, I can use that for something else. I think that's actually fine. So as you say, if you go back to the Bitcoin white paper, the Bitcoin paper, where the key expression is that it's an ability of peer-to-peer financial transactions without an intermediary or without a trusted third party. So the fact that people are actually using it for different things, so what? I think adoption is whatever people want to use it for, and that's why I'll keep going back to SMS and that. And the whole idea of, for those who remember Nokia 3110s and how you had to type like the number 1 3 times for the letter C and the number 2 once for the letter D, and all these kind of weird things that, when I describe that to people now, they go, that's crazy. But it got adopted and it got used for a completely different purpose. So I'm actually cool with that.
Yeah, I understand what you mean. Yeah, but if you create a chair, a chair is supposed for people to sit on it, right? But then if you're going to use a chair to do all sorts of stuff, yes, you can do. Nothing prevents you from doing that. Yeah. But the actual purpose was for you to sit on the chair, for people to sit on the chair. And every single product has a purpose. Yeah. How people intend to use it is a different thing. Yeah. Mm-hmm. So it's a basic rule of product development. Yeah. And the promise of being a peer-to-peer payment system, yeah, it actually was okay, yeah, in the beginning. What the creators didn't realize, or really didn't, or maybe they did, yeah, but there wasn't a solution at the time, is that with massive adoption, then the problems would start to happen, obviously, and the block times taking so long. I mean, 10 minutes block times is an eternity for any potential real payment, a real-time payment solution out there. It's really an eternity. So actually, it failed right from beginning, its purpose, yeah. But I'm glad it continued because and people try to be creative in using it and doing different ways, yeah. But there are things that, for example, ordinals and all of the stuff people trying to build around it is just insane, in my opinion. Being really honest here, because it's going to create all sorts of problems, and I don't think there is a real reason for it to exist. Yeah, if it was something that, for example, what's it called, L2L, yeah. Drive chains. Have you heard of drive chains?
No, so tell us more.
I urge you guys to look at it. Yeah, drive chains L2L. So it's a layer 2 on blockchain. Layer 2 on Bitcoin blockchain, and it looks very promising, to be truly honest. The concept is pretty much of creating side chains. Yeah, so you think about a Bitcoin chain and then creating side chains, and then if you create your own drive chain, you'll be able then to create smart contracts around it, etc., etc. So super interesting. I'm still trying to get my head around it. I haven't had much time in the last couple of weeks, but the founders are cool guys. One of the things that they have looks like Adam Back. It's a supporter of it. So there's some core people, real core people in Bitcoin, and Adam Back is one of them. it is nice to be Satoshi, but many people say he is one of them, you know. But it looks like he's a big supporter of the concept. So yeah, have a look at it. Super, super interesting.
Okay, and that's cool. What did you say it was layer 12?
L2L, and just Google drive chains.
Okay, I'll do that separately.
Bitcoin drive chains, yeah.
So Hugo, going back to your original question, really, I was just having a quick dig around, take a look at the Gartner hype cycle. I find is really, really good for looking at the evolution of technologies and that. They tend to not be that far off. I don't know who's actually done this, because it's not actually a Gartner hype cycle, but it's used a kind of approach which describe different components of blockchain. And this is where JT was saying before about you've got like DeFi hype, you've got NFT hype, you've got all this kind of thing. So what I'm seeing is that we are going through this blockchain hype cycle at the moment, where we are in the trough of disillusionment, as Gartner would call it at the moment, where I think a lot of projects have discovered that either the technology isn't as mature as it needs to be, or the business need isn't there. And actually, it's the business need or the appetite to change the business, which means that blockchain at the moment, you're not hearing that much going on with it. And what you are hearing is all of this inflated expectation, all this hype around things. I mean, decentralized identity, I think, is an area you're going to see a lot of in 2024, particularly when it links in with DeFi and that, because people are going to want to look after their own identity. So I see blockchain going through this hype cycle, but then within that, there's things like a DeFi hype cycle, an NFT hype cycle, and various others. But in terms of general adoption, I don't think we're quite there yet.
Yeah, lots of good things to unpack. Just a couple of thoughts, maybe not in order. One, I think this is my view. Again, I might be wrong about everything, but one is a lot of this is building infrastructure. I mean, you have to build infrastructure before you can have applications. And I'm hoping that's the case. But having said that, there's a lot of things that somebody who's building an application on blockchain doesn't have to build because there's the infrastructure there, right? The second part is of course a trick. And I think I heard you say that in one of previous episodes, but that's also my view that I'm a technical person from originally, but then I don't think I can be called that anymore. But my point is that there's a lot of technical people building things and not necessarily people from the industry. But that's when you start getting real solutions, because you come up with actual problems that you need to solve. And my third point is a little bit about with the whole point of technology and how it's adopted and so on. The Innovator's Dilemma book mentions at some point that there's a technical problem for the technology. It says, but when you have a new technology, it's a lot of times it's a marketing problem, as in finding the right problem and the right application, right? Like we were saying, Bitcoin was supposed to do this, but now people do it for something else. And the examples that I have, I think they're not that much talked about in the press. But I'm originally from Mexico. I live in London now. But there's some amazing things, some real big problems that in emerging markets you have that don't exist in countries like the UK and the US. And just very simple example: remittances from the US to Mexico. It's the second biggest source of income for Mexico. Second biggest, not biggest. But there's these huge fees, these huge delays, the exchange rates are exorbitant and so on. And I think one company in Mexico was already processing between 5 and 10% of remittances, that's billions and billions of dollars, right? And it's cheaper and it's faster and it's everything, right? That's one. The other is places like Argentina, Venezuela, and so on, where it's just store of value, right? And there's bigger adoption. There's smaller countries, but there's big adoption there. There's a real use case, and you say, instead of having money in the bank, which the government can seize or devalue the currency from any moment, it's easier to have it in Bitcoin. And I think I saw a chart that in Argentina and Turkey, even when the price of Bitcoin had gone down, in most countries, or if you measure it in pounds or in dollars, it had gone down. But in pesos and lira, I think it's in Turkey, they had gone up, right? And the other one is, and then you find some more industry-specific applications. I found a company in Argentina that does they tokenize grain for farmers, which can then be used to secure loans to finance, like all the what you need to actually harvest and everything and so on.
Yep.
So those are some really cool applications. They don't get mentioned in the press that much, but I think that for me is actually seeing whatever follows the through disillusionment, which is I think is called the plateau of productivity.
Yep.
When you find some actual use cases, the technology is solving some real problem. And I think somebody mentioned at the beginning of the call, I think it was you, you don't even need to know that there's that
exactly.
blockchain or whatever technology is behind it, but it just works and it solves a problem, right? And one final comment, sorry. And if you mentioned something really, really interesting, which is that you don't introduce blockchain in a company, you introduce it in a marketplace, and it makes all the sense in the world because I also worked in finance for a bit, and what I saw is banks they're separate databases that at some point need to talk to each other, and it's a mess. It's really expensive. They were not designed to do that, and so on. But blockchain solves that problem. And for me, DeFi is really promising because I'm thinking a lot of these things that we try to do in banking and all the costs that it had from technology standpoint and so on, you can do in a much simpler way through something like blockchain and DeFi and so on. And my final theory is that we need to work a lot on UX. Because that's the tricky part that nobody's really talking about. Well, people talk about it. Again, from a technology standpoint, I wish I was better at it, but I know we as an industry are lacking in that respect. So sorry, that was like 5 different points, but there were really lots of interesting comments before.
I think they're really good comments as well. So I sometimes have conversations with people about what needs to be done to educate people about blockchain. And my argument is you shouldn't need to educate people about blockchain. They should just be able to use it. And what we actually need to do is we need to educate the people in the blockchain sector in how to make stuff so easy that people will just use it without trying. And that's where we're still failing at the moment. I believe people are like water. They will take the path of least resistance. So if you can give them something that makes it easier, cheaper, faster for them to do, they'll do it. The problem at the moment with a lot of blockchain-based solutions is you're still having to go through this, I need to have a wallet, I need a seed phrase, I need this, blah, blah, blah. If we can make it easier for people, then I think that then we'll get adoption. But so I agree with you on that. In terms of remittances, you're absolutely right that the marketplace remittances of repatriation of money, whether it's Mexican peso or Mexican money from Mexicans working in the US, going back across the border, definitely a big opportunity there. And that's where the likes of Cash App and Casha were positioning themselves on that, definitely. And again, on like India, there's a lot of Indians working in the Middle East where they pay ridiculous amounts to repatriate funds in that. So there's definitely markets there. I think there's certainly things on that. But yeah, in terms of the overall adoption, I agree that we're not at this plateau of productivity or whatever thing it was. I think we are still a little while away from it. And, I think JT was saying about it before about how the people in the industry need to maybe rethink some things about actually using these things. But ultimately, it comes back to what I said before. If you make stuff easier to use, people will use it, definitely. But yeah, I think the other points that you're making were valid. But what I am seeing as well, it's interesting, my philosophy, and it's stolen actually. There's a guy who I've not spoken to a long time who came up with a phrase that you can only have so much fun with the blockchain on your own. Is why I believe that blockchain is an architecture that you use in an industry rather than within a company. Because if you want to use a blockchain within your own company, just use a database, because there's no advantage to using a blockchain type thing. And that's why it's interesting you're saying about like finance and banking. The problem with using blockchains in a finance environment, or certainly in a banking environment, is it needs the complete participation of all the participants. And until you get there, you're going to struggle. And so that's where it's been good to see the likes of R3 with their Cord platform and some of the Hyperledger stuff is about that whole getting companies to work together. That's why I like insurance. In insurance, I describe it as a marketplace of collaborative competitors, because I do a lot of stuff in the London insurance market with the brokers and the underwriters, and it's fantastic how they're really willing to work with each other in order to build a marketplace. So that's why I still think insurance is the place for blockchain, but there aren't that many implementations of it. So you've got Blocksure, who were doing some stuff that they had a blockchain-based policy admin solution, which Covea Insurance were using, but Blocksure have kind of like fallen off the radar. There's ChainThat, who developed some interesting stuff around smart contracts and blockchain-based things. They're going through a bit of a change at the moment. Their founders have swapped around, and so David, who was the CEO, stepped down. But the other co-founder stepped in. But ChainThat worth looking at, because they're doing some interesting stuff in the blockchain space. And there's a few other blockchain solutions as well. EtherRisk is the other one.
EtherRisk and Nexus Mutual, I think, come to mind, right?
Yeah, so EtherRisk done some great stuff around catastrophe insurance. So things like if you've got a windstorm which has destroyed a crop, then they do like an insurance platform with Aon, who are a big insurance broker, around insuring that. So that seems to be doing quite well. And they've also got a flight delay solution, which is kind of quite similar to Fizzy, which I mentioned before, which AXA did. But EtherRisk have been doing it for longer, and it seems to work as well. And then, as Bundit mentions, there's Nexus Mutual. Nexus Mutual, we were talking about them the other week, because some of the people have a very good insurance background. In fact, one of the founders is ex-Munich Re, so seriously knows the stuff. And they offer a form of, you can't call it insurance because it's technically not insurance, but compensation for smart contract failure, which is kind of quite interesting. So yeah, they're doing some interesting stuff in that space as well. So I think there are companies who are still exploring it, but there's quite a few projects that were looking really, really good and then have died off. As I say, ASX in Australia was one. I think DTCC were doing something in Australia that seems to have died away. And then you get things like there's a few carbon credit projects that are using blockchains. And then another one that I forgot about, World Mobile Token. This is not a financial recommendation or anything like that, but definitely take a look at World Mobile Token, which I think the token's WMT, but take a look at what they're doing, which is about effectively creating a whole new digital infrastructure in Africa. So it's like the equivalent of a telco network using airships. So the airships have got transmitters and receivers, and it effectively allows them to build up kind of like a mesh network. And I think they trial that in Zanzibar and somewhere in East Africa. But they seem to be doing some interesting stuff, and that's kind of blockchain based. So I think it's all. I think it was Bill Gates who said a few years ago that the thing with technology is that new innovations always take much longer to happen, but always have a much bigger impact over long term. And I think that is still true with blockchain. You know, I've been in the space as I started working in it about 8 years ago. And I thought I was late to the game 8 years ago, and it turns out maybe I was early. So, and it still feels early now. So we'll see. I don't know.
Yeah, I know what you mean, but I think we're just losing time. You know, just see, it has passed what 14 years already.
Yeah, but
and, you know, Gary, for me, the most incredible thing is that all of these guys that have created infrastructure, like L1s, you know, I'm not a fan of L2s, as you know, because for me, if L1 needs an L2, it means it was badly architected right from the core, and it's needing an L2. Yeah, So not a big fan. They got so much money and they don't understand the basic principles of business. Okay. I'm just going to give you an example of a non-blockchain business. You know, you've probably heard of Snowflake. Yeah. Database, fantastic database. I saw it right from the beginning. They were right at the beginning. And what do? They create an enterprise part of the organization to support businesses, you know, it's a sales channel, you know, to support businesses. Now, if anyone, let's say Polygon or it doesn't matter, yeah, Polygon, okay, L2, but you know, any layer about Cosmos or whatever, any of these guys go to a CIO, Chief Information Officer, or the CTO, it doesn't matter, small, medium, or large organization, majority will never, ever adopt their solution. They'll put it on a sandbox and they do some tests. Because they have ISO standards, ISO 27001, you know, SOX compliance, you name it, you know, they cannot accept. The first question that I would ask for my past life, yeah, as a CTO, the first question I would ask was, what is your SLA? Any technology company, yeah? And guess what? They would have to tell me, yeah, 99.9, whatever, this is the agreement, blah, 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 you review, then you accept if you want to onboard that technology or not. Tell me which company in our space, doesn't matter, L1, whatever, any infrastructure project out there provides an SLA for companies. That's why there isn't adoption. The adoption is not there because these guys, they don't know what they are doing, Gary, okay? It's as simple as that. Majority of them.
This is why it's always amused me, because I've always considered myself as kind of like part of the blockchain industry, but it's an industry that shouldn't exist. That's like saying you're part of the SQL Server industry. Now there are people who specialize in SQL Server, and some great people in there, but to actually come up with the idea that blockchain is an industry in its own right is just kind of crazy in some ways. What it should be is exactly as JC says, it should be about using the technology to solve business problems. And that's when you get the adoption. So going back to the comments about it taking time and how it's been around for 14 years and that, I'd offer a counter argument, because I keep coming back to blockchain development is a little bit like aviation. And if you look at how aviation as a technology developed, you know, in 1903, you got these two guys on a beach with this little airplane that does a hop of about 80 feet or whatever it was, which was the Wright brothers on Kitty Hawk. And that was in 1903. And kind of blockchain was a similar point to that about 10 years ago, I would say. And even then, you're getting people who are kind of saying the equivalent of well, that's never going to fly at 500 miles an hour with 400 people on it across the Atlantic, is it? You know, people are already marking it down. So I would still argue that blockchain, compared to aviation, is probably at about the 1908, 1911 phase right now, which is Louis Blériot and the first monoplanes. So it's beginning to improve, but it's not there yet. And we've still got a long way to go before we've got Boeing 767s or 777s or whatever carrying hundreds of people, thousands of miles. So I think we're not there. And when you compare blockchain as a technology to other technologies, so let's look at AI. Now, everyone's talking about, well, a few months ago, it was ChatGPT and GPT-3. Now it's all about large language models and generative AI. So, you know, any project that says Gen AI against it right now is really, and everyone's going, oh, wow, this is fantastic. Look at how fast AI has developed, blah, 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 blah. But AI has been around since the Dartmouth conference in 1954. So it's coming on for 70 years old. And it's taken nearly 70 years to get to the point where it is now beginning to be adopted. So for blockchain, if you look back at Bitcoin's like 2008. You might argue you had some like multi-chain or something just before it, but you know it's less than 20 years old as a technology, so it's still quite new. But I agree, JT, as well. There's a lot of money has gone into projects, and you would have thought there would have been bigger returns by now. And I think that's because you've had people who are just FOMOing, so the fear of missing out, have put loads of money into stuff because they could see the potential with this. And they've given it to people who are excited by the technology and not excited by the difference the technology could make, which I think is far more interesting. And I think that'll gradually happen as we mature. So, the current fad in the blockchain space is real world assets. This whole thing of tokenizing things. What that allows is, so someone was saying before about how blockchain is kind of like the foundation layer. So I describe blockchain as a little bit like the railway lines that you're putting in place the track upon which the trains will operate, and you need the track to begin with. And so blockchains, I believe, are putting in the track for things like real world assets to succeed on, and that kind of thing. And that's where I think we're going to see an interesting different thing, that whereas with some DeFi stuff and some NFT stuff, it was all hype driven, speculative, to the moon, blah, blah, blah type thing. Once you start connecting with real world assets, you then have to start complying with real world regulation and real world processes. And that's where I think the market will start to mature quite rapidly. And then I think we're going to see adoption. But that's my kind of thinking on it, Hugo.
Very similar to yours, Gary. So yeah. And we're running out of time. Oh my God, we continue this for another 3 hours. No, but summary, I actually see the point that you're making. Because we have use cases like the ones that Bondip was mentioning at the beginning. And that's just one example. There are many, 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 many more. But yeah, and I agree. It's now that it's getting to the real world is where we can see it's not the only use case, but some use cases that will drive forward. Forget about technology, the industry and the business models and so on, because there are some big needs there that are not being met by what we have today.
Definitely. The thing I find fascinating is that blockchain-based solutions for things like supply chain, product traceability, provenance, all this kind of thing is fascinating. But a lot of the time, people think that they want traceability and transparency to be able to find the source of goods and that. And then you actually discover that there's some dark practices going on in the supply chain where companies don't necessarily want you to know where they're getting stuff from. So, if you're operating in an ethical market, so it's great in London, there was a company called Provenance, who were doing provenance of leather goods and certain fish, I think it was. That's great because you're able to track and trace the origins of where this leather handbag has come from. It's not gone through a sweatshop and that. You've got Everledger, who are doing like diamond traceability and against the provenance and complying with the Kimberley process and all this kind of thing. They're all great ideas, but then you discover that each industry has got these dark little areas where they actually don't want transparency. So we'll see over time. Folks, as Hugo says, we're kind of out of time, really. I try and cut these off. So I hope everyone found that of interest, and thanks everyone for contributing and sharing. For those who are watching online afterwards of the recording, hope you enjoy this. And we'll close off, and I'll say have a great day, everybody. Thanks for coming along. Cheers.